Hey everyone, Mark Hammer here and Martine Perron with Art Mortgages. So we've had some big announcements today. The Fed's slashed rates 0.5%. And so everybody's like, oh my gosh, rates are down now. What's the bank rate at? 3.25?
Yes, it
Yeah.
changed from 3.75 to 3.25.
And that's quite significant considering in August we're at a full percent higher.
Yes.
So, we're going the right way. But, is it really going to affect the market? And so my question was with you earlier today is what are rates, where they're at now compared to what were they at, yesterday?
Yeah.
And so can you share with us?
Yeah, great question, Mark. So current homeowners that already have a variable rate will see a significant change. It's, $15 for every 0.25, meaning on 100,000. So they're gonna see a change. Current homeowners already have like a good discount usually on the prime, right? So their variable rate will drop by 50 points. It's a good change. However, for new people going into the market, they are not going to see that change as strongly. Why? Because what happens when the variable rates decrease, the bank also decrease the discount on the prime. So at a time where variable rates were super high, people would see prime -1, prime -1.20. But the new rate sheets that I'm getting, it's prime -20. So instead of having a full percent and more discount, it's a smaller discount. So when someone is looking to buy, thinking, oh, yay, the variable rates dropped by 50 beeps, actually not so much because the discount on the prime is getting reduced.
So, I've got a couple variable mortgages and so basically what would the savings be? On a variable mortgage
It would,
with the current rate cut compared to, say, in August when it was at 4.25 for the bank rate.
yep. For current variable rate mortgage, they're gonna see a reduced payment of $30 for every $100,000. So if your mortgage is 500, it's 5 times 30, so $150 less every month.
I mean, that helps,
It does help for sure.
but it's not a game changer.
It's not a game changer. We're expecting, from The Economist that I'm reading the news, we're expecting an additional 3 cut in 2025, about 25 beeps each. But hopefully, where I would really like to see a change is with the fixed rates. The fixed rates, we saw some rates around 4%, which was great, but we haven't seen really nothing under that. And the bound is pretty steady around 2.8, 2.9.
So the banks are making more money.
Yes.
Interesting. It's like, I mean, gosh, back in COVID times, we've seen people getting $1 million mortgages and their payments were like $3,000 a month.
Yeah, it was a great time.
Right? And it was a great time. Yeah, just get a basement suite, buy a place for $2 million, and have a basement suite and you're living positive cash flow. You can go up, buy a car and a boat and jet ski and you name it. Things are different now. What would a $1 million mortgage payment be now? $6,000 a month?
Yes. Yes.
Yeah. And, this is affecting investors right now because there's lots of investors out there that are having to subsidize their mortgage payment, and they've been doing it now for what, 2 years?
Yeah, and there's a strategy that's not well known, but there's a way for investors with property, with rental, where it's not cash flow positive, right? It's cash flow negative, but there's a way to just change the way the money's flowing to make things work. I recently helped someone that had 2 investment properties. The 2 property were cash flow negative. And by doing my restructuring, the strategy, now there's less money leaving his pocket every month, but he's still paying for everything on the investment properties. We're just changing the way the money flows.
Oh, and I know what that is. That's the Smith maneuver.
It is, yes. It's a
And
great
that's what
strategy.
and that's what you're getting me into, is the Smith
Yes.
maneuver.
Yes.
And so I'm going to be able to save money on taxes, pay my mortgages down instead of 25 years, probably 15 years. So save 10 years of mortgage payments and create wealth.
Absolutely. All at the same time. You know, our governments are really pushing that message where, hey, pay off your debt really fast and then start saving money, right? But there's a way to do it at the same time. And
Well, that's great.
and when you do that strategy, the interest rates matters, but not as much, because you're now making the money work for you instead of working for the money.
Well, that's how wealth is created.
Yes.
Well, that's great. So, Martine, thank you for jumping on today. We'll have your information on the newsletter, and we'll put the information up on the screen. So there you go, Martine Perron, Arc Mortgages. She's a great mortgage broker. And, you know, thank God I'm able to, you know, save money on taxes and pay down equity so much faster. So that's whatever the maneuver, the Smith maneuver, Martine maneuver, it's perfect. So keep at it. And thank you for that.
Yeah, I'm really excited for you.
Well, I'm excited for us. So.
Game changer.
Game changer.
Yeah.
All right. Well, thank you for your time, and bye for now.
Bye for now.